Hello and welcome to Simplicity in Stocks. In the Indian stock market, foreign institutional investors (FIIs) and domestic institutional investors (DIIs) have significant research capabilities. This gives Indian retail investors the confidence to emulate their investments. Many FIIs and DIIs tend to follow conservative and long-term strategies, which may be useful for retail investors considering long-term investments. That said, investors should prioritize personalized goal-oriented strategies, conducting their own due diligence and adapting to evolving conditions for sustainable wealth creation. In this video, we will cover three small cap stocks where the data reveals that FIIs and DIIs have increased their stakes in the September 2025 quarter. But first, please note that this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. The three small cap stocks bought by FIIs and DIIs in the second quarter of FY26 include Shilchar Technologies, Swaraj Engines, and Pondy Oxides. Here's some more about these companies. Shilchar Technologies is a company manufacturing electronic components and transformers. The company initially produced R-core transformers. However, it expanded into ferrite transformers and later diversified into power and distribution transformers. FIIs have hiked their stake to 2.7% in the company in the second quarter of FY26 from 2.1% in the first quarter of FY26. DIIs have also hiked their stake to 0.3% from 0.1% in the same period. The company reported revenues of 1,713 million rupees in the second quarter against rupees 1,306 million rupees in the corresponding period last year. Net profits also jumped to rupees 459 million from rupees 327 million year on year. The company is exploring capacity expansion at its site in Gawasad. This is a strategic move, keeping in mind demand projections from clients and industry trends. The management is confident about leveraging the company's sizable land bank at this site for sustained growth. Swaraj Engines is mainly involved in the supply of engines to Mahindra & Mahindra's Swaraj division. Diesel engines with 22 horsepower to more than 65 horsepower are manufactured and supplied by the company. It also produces engine parts. FIIs have hiked their stake in the company to 3.9% in the second quarter from 3.7% in the first quarter. DIIs have also hiked their stake to 9.7% from 9.3% in the same period. The company has reported revenues of 5,040 million in the second quarter against rupees 4,642 million in the corresponding period last year. Net profits have also jumped to 497 million rupees from 454 million rupees year on year. As the company's business is selling diesel engines for tractors manufactured by M&M Swaraj, its prospects are directly linked to the Indian tractor industry. The Indian tractor industry is dominated by a few domestic players alongside some MNCs. This sector has seen an increase in farm mechanization, driven by rising rural incomes, growing awareness among farmers, and government support through subsidies and financing schemes. Pondy Oxides is recognized as one of the largest recyclers of non-ferrous metals and a leading manufacturer of lead and lead alloys. In this company, FIIs have hiked their stake to 1.8% in the second quarter from 1.3% in the first quarter. DIIs have also hiked their stake to 7% from 6.2% in the same period last year. The company has reported revenues of 6,404 million in the second quarter against 5,791 million in the corresponding period last year. Net profits have also jumped to 339 million rupees from 153 million rupees year on year. The management has anticipated a capex of rupees 500 million in FY26. The plan includes the addition of 72,000 MTPA lead production capacity over two phases. The company's long-term growth strategy is rooted in backward integration and portfolio diversification. Observing the actions of these seasoned FIs and DIs can offer valuable insights to retail investors. But there are also significant risks involving the difference in scale of investments, risk tolerance, and execution challenges. This is important for retail investors to consider. Rather than replicating strategies followed by these investors, it is prudent to adapt them to individual objectives and financial limitations. Investors should also evaluate the company's fundamentals, corporate governance, and the valuations of the stocks when conducting due diligence before making any investment decision. Happy investing.